Hi, in this class I explain the kind of companies. So a company can be classified on the basis of its liability or on the basis of number of its members. So first let's understand on the basis of the liability. On the basis of the liability, a company can be limited by shares, or a company can be limited by guarantee, or a company can be limited by liability, company with unlimited liability or unlimited company. So let's first understand company limited by shares. So this is a company where the liability of members are limited to the extent of the paid up to the extent of the share capital. So for example, if a person has subscribed 10 shares and the face value of shares is 100 rupees, so the liability of that member is limited to 1000 rupees. And out of 1000 rupees, if he has already paid 900 rupees, so the remaining liability is only up to 100 rupees. So in the event of any insolvency or the winding up of the company, he is responsible only for 100 rupees, not any more. So company limited by guarantee. So this company does not have any share capital, and the members have given guarantee to a certain amount. For example, if a member has given, like in the event of insolvency or winding up, that person will contribute 1000 rupees. So the member is responsible for 1000 rupees only in the event of winding up or insolvency of that company, and that too limited by 1000 rupees. Or the guarantee or any other amount for which it has given the guarantee. So company with unlimited liability or unlimited companies are company on which there is no share capital, on which there is no limitation on the liability of a member. So it can be limited by guarantee or it can be limited by the company with unlimited liability can have share capital or may not have share capital, but the liability of the member is unlimited. So for example, in the event of winding up, even the private properties of the member can be held responsible, and there is no specific limit applies to the liabilities of members. So all the even capital of the member can be used to pay off the liability of the company in case of unlimited company. So on the basis of number of members, a company can be divided into a public company or a private company or a one-person company. A public company is a company in which there are minimum 7 members and there is no limit on the maximum number of members it can have. So for example, Reliance has lakhs of members. So private company, minimum can be 2 members in a private company and maximum can be 200 members. So these 200 members does not include employees or ex-employees. So one person company is a company in which there is only one person is a member, but that one person should be a natural person. So a company cannot have the member of a one person company, and that natural person should be an Indian citizen and resident. So if an Indian citizen stays abroad and he is not a resident in India, he cannot be the member of a one person company. So the paid up capital of the one person company can be up to only 50 lakhs. If the paid up capital is more than 50 lakh, so that company will have to be converted into private company or public company. And an annual average annual turnover of the last 3 years should be up to 2 crore only. If the turnover exceed 2 crore, it has to be converted into a private company or a public company.